I'm Diane in New York at Nareit's REIT Week, our 2019 investor conference. I'm here with Chris Czarnecki, President and CEO of Broadstone Real Estate. Hi, Chris.
Thank you for having me.
Thanks for being here. Let's start with Broadstone Net Lease. How is the company looking to build upon the tremendous momentum it built up in 2018?
Yeah, in the net lease space, I always think of 3 or 4 key tenets. One is cost-effective access to capital, obviously acquisition volume to keep growing AFFO per share, and then prudent portfolio management. And each of those tactics were important to us in 2018 and continue to execute on them in 2019. Early in the year, we increased our line of credit from $425 million to $600 million to give us more liquidity to help grow. And we actually also completed one of the largest 7-year bank term note offerings at $450 million as well. And that refinanced some existing debt and also provided some dry powder for additional acquisitions. On the portfolio management side, I'd say this year we've been very focused on dispositions, continuing to sell assets that are no longer core to our portfolio, focusing on selling smaller assets, maybe proverbially said legacy assets that we acquired when we were smaller, looking to build diversification but aren't quite core to our strategy anymore. And then on the acquisitions front, always a tough battle for new properties and quality assets, continuing to think more broadly about how we acquire. The great part about our model is we're able to be flexible. We've can be a little bit to the left or to the right of some of our core food groups, as I talk about, making more investments in the cold storage space, which is a derivative of the industry or of the industrial space, and thinking more broadly about that, and then also empowering our team to do some smaller, more repeat business with tenants and folks that we have good relationships with and good understanding, and trying to drive more volume through more transactions in that way.
What housing trends are you looking to capitalize on with Broadtree Residential?
Yeah, I think one of the key things we focus on very much with Broadtree Residential is our focus on acquiring core stabilized assets. And that means different things in different markets. In more primary markets where we have a good chunk of our portfolio, such as Atlanta, we're probably acquiring Class B assets, solid assets that are priced from a rent perspective really well below the Class A space. New development in places like Atlanta command very high rents and aren't particularly affordable to everybody. And we really favor the Class B space in that type of a primary market because we can see solid NOI growth and solid rent growth month after month, quarter after quarter, and really have a lot of space before we'd get into the proverbial luxury product. In more secondary markets where we're also spending time, we are able to acquire, again, on that core stabilized theme, higher quality assets that have greater durability and we can own for 15 or 20 years potentially. And so really it's our position relative to the cost of new development and where rents are. And generally on the new development side, rents are fairly high and we want to be well below that so we can build NOI over the long term.
And finally, when we last spoke, the company had recently launched Broadstone Real Estate Access Fund. How has that progressed, and what are your expectations moving forward?
Absolutely. So we launched the Access Fund, BDREX as we call it, to provide the Broadstone investment philosophy to more folks. We had demand from our wealth advisors and people that provide us capital really with 3 or 4 asks. They wanted more liquidity, more diversification, and lower minimum investment levels so that their clients could participate in our structure of investing. And since we launched last fall in November, we've built a very nice portfolio. We've been supporting our dividend out of the gate. We have a good set of diversification, and we have 3 tenants within the portfolio. One being public equities to provide liquidity and support and give exposure to that market, and we've had a very nice sub-portfolio built there. We've been doing institutional investing through our fund-to-funds approach, and have now made 5 core investments there. And then as the fund continues to grow and progress, we'll also invest in direct real estate that isn't competitive with our other vehicles. And we are looking at some interesting partnership opportunities and unique ways to bring institutional real estate into the fund in that way. So on the portfolio and progress development, we've really ticked along very nicely, and we're starting to see the capital flows to support that then.
Chris, thank you so much.
Always a pleasure.
For more on Nareit's REIT Week, visit REIT.com.